Oil futures traded lower Thursday, with the U.S. benchmark pulling back from a 7-year high on suspected profit-taking a day after the Organization of the Petroleum Exporting Countries and its allies stuck with a plan to boost production by another 400,000 barrels a day in March. The group of oil producers known as OPEC Plus refused to be pressured into raising output faster in March or, perhaps, were forced to do something they're unable to do right now, said Craig Erlam, senior market analyst at OANDA, in a note. The group stood by previous commitments on Wednesday, which leaves us to wonder just how much they will actually manage to deliver this time, he said. The steady approach didn't generate any fresh optimism for crude, despite rumors beforehand that we could see a larger increase in March, amid political pressure. Instead, we seem to be seeing a little profit-taking, said Erlam. West Texas Intermediate crude for March delivery CL00, plus 0.69% CL.1, plus 0.69% CLH22, plus 0.69% edged down by 14 cents or 0.2%, to $88.12 a barrel on the New York Mercantile Exchange after eking out a small gain Wednesday for its highest finish since October 2014. April Brent crude BRN00, plus 0.53% BRNJ22, plus 0.53%, the global benchmark, was down 17 cents or 0.2% at $89.30 a barrel on ICE Futures Europe. The decision by OPEC Plus to boost output by 400,000 barrels a day was seen as supportive, with the group continuing to resist pressure from the US and big oil-consuming countries for a more aggressive boost. Meanwhile, OPEC Plus has failed to raise output in line with past monthly increases. Why OPEC Plus can't hit its oil production targets, and what it could do about it also. Several OPEC Plus representatives appeared to tie the recent rise in prices to tensions between Russia, a member of the group, and Ukraine. Pumping more oil onto the market just now will do little to change this in our view, said Carsten Fritsch, analyst at Commerzbank, in a note. It is more important to be able to supply more oil to the market if need be. And for this to be possible, sufficient spare capacities are vital. Yesterday's decision by OPEC Plus makes sense to us, in other words. In other energy trading on NYMEX, March gasoline RBH22, plus 0.40% lost 0.2% to $2.601 a gallon. While March heating oil HOH22, plus 1.23% added 0.4% to $2.781 a gallon. After a nearly 16% rise on Wednesday with winter storms expected to boost demand for the heating fuel, natural gas futures fell back Thursday. March natural gas NGH22, minus 11.20% traded at $4.938 per million British thermal units, down 10.3%. Prices continue to trade lower after the Energy Information Administration reported that domestic natural gas supplies fell by 268 billion cubic feet for the week ended January 28. That compared with the average decline of 274 billion cubic feet forecast by analysts polled by S&P Global Platts, which pegged the 5-year average supply fall for the period at 150 billion cubic feet.